Welcome to today's session. Super excited to be here with every single one of y'all. And let's get straight into the markets, guys, and see what we got here. And start off by taking a look at the economic calendar, right? So to start off the week, what do we have here? I'm just taking a look to see if there's anything of importance, guys, that we have to be aware of. On Monday, we obviously do have to be aware of this, right? There is a bank holiday over there in the UK, and that is going to affect, guys, the Great Britain pound and the currencies, in that area, right? So again, anytime that there is a bank holiday, it's very important for us to be aware of that. Why? Because who is the ones that are providing most of the liquidity in these markets? The banks, right? Especially a lot of these central banks are also the ones that really are playing a big part in this, right? So whenever we do have a day, guys, right, or a holiday that causes the banks to be closed, then there's probably not going to be as much volume in the markets, right? So the markets might not move as smoothly or as, you might be used to, right? So sometimes it might just make sense for you to not even trade that currency that's attached to that economy that has the holiday, right, that the banks are closed for. So for the pound, be very mindful that, there is probably not going to be as much volume in the markets for the pound on Monday. So that's just something to be aware of, guys, for Monday, that there is just a bank holiday. Going into Tuesday, let's see what we have on Tuesday. We do have a consumer confidence report getting released. This is very, very important, guys. It's going to tell us pretty much how what the sentiment is from the consumer standpoint overall on the markets. You guys know that I'm very, very big on understanding sentiment overall, right? When you can figure out the sentiment in the market, you understand exactly what these currencies and these assets are actually going to do. So again, understanding sentiment is crucial. And the consumer confidence report, guys, is something that could really help us out with that. Right, because obviously if the report is coming out showing that there is a lot of consumer confidence in the overall state of the markets and the overall economy, then yeah, maybe that's going to lead to more of a risk on environment, right? When there is confidence. But when this report is showing that there's a lack of confidence, then that is definitely going to continue with what we've been experiencing, which is risk off, right? Where the dollar is benefiting, indices are getting destroyed, right? Riskier plays are getting destroyed overall. So, that's definitely going to be one that I'm going to be paying attention to for sure on Tuesday, is that consumer confidence report to see exactly what is going on. Now, we do have an FOMC member that's going to be speaking on Tuesday. Ooh, excuse me. Right, they're going to be speaking on Tuesday. Now, anything to do with anybody, right? It doesn't matter who's a part of or who's speaking, right? Anybody that's a part of the FOMC committee, guys, you definitely wanted to be mindful of, because whatever they say, right, is definitely going to be looked at through a microscope, right? Where people are going to really try to dissect every single word that's coming out of these people's mouths, right? So again, just be mindful of that. It could bring some volatility into the markets depending on what is actually being said. All right, so that's that for the US dollar. And for this release at 11 o'clock. Now, let's see what else we have here that could be of importance for us. So nothing else too crazy, guys, on Tuesday. Let's go into Wednesday and see if there's anything here. So we do have for the euro, the German unemployment change and the German unemployment rate. Again, obviously, that is definitely something that traders and investors are probably going to be aware of, or at least be paying attention to. But what I think the most important release of Wednesday is probably going to be, at least one of them, is going to be this one right here, core CPI and CPI data that's getting released for the euro as a whole. And this is, again, going to be very, very important because it's going to pretty much, tell us as traders and investors, the state of the economy over there, right? Is inflation still high, right? Is the change in the price of goods continuously increasing year over year, right? Because that's pretty much what we've all been experiencing, is in high inflation, which is causing these central banks to tighten up, right? And because of that tightening, it's also causing a lot of things to increase in price, right? Like, now it's a lot more expensive to borrow money, right? To apply for a mortgage than it just was a year ago, right? And it's because of obviously this crazy inflation we've been dealing with. So right now they're actually expecting it to come out a little bit higher, literally 0.1% higher, up to 9%. So obviously, like we've been talking about, high inflation is going to cause these central banks to continue to increase interest rates. And if these central banks are still hawkish, which means that they do expect to raise rates, then we need to understand how that's going to influence these currencies. Right now, for this one with the euro, guys, yeah, high inflation short term can definitely bring some volatility or some strength into the euro. Now, is it going to make the euro USD chart absolutely fly? Not long term, no, probably not, because again, it is you're trying to talk about it going against the US dollar, right? Which is the daddy dollar here, right? So no, against the dollar is probably not going to gain too much strength, but the euro can possibly gain strength against other cross pairs, right? It could gain strength possibly against the Australian dollar, against the pound, right? Against these other ones, the New Zealand, you don't know, right? Because again, it's just against the dollar, there's no chance. The dollar is just too strong. But against these other ones, then yeah, there is a possibility for you to take advantage of euro strength if this does come out high, right? If it does come out at 9%, then the euro is probably going to gain some strength against these other ones. Again, it could be even short term against the dollar, but long term, the dollar is still going to just dominate. So, that's just how we would approach these markets, guys, looking at other currencies, CPI reports and things like that, and how to position ourselves. So that's definitely going to be one of the bigger ones, guys, for Wednesday that a lot of traders and investors are going to be aware of. And then we also do have for the Canadian dollar. Actually, before that, we do have an FOMC member that's going to be testifying or is going to be speaking. Just be mindful of that. But we do have the ADP non-farm employment change that's getting released for the U.S., right? So that's definitely going to be an interesting release. But we do have Canadian data that's getting released with the GDP reports. Again, this is just a revision, right? An update for what happened with Q2. It could bring some strength depending on how it comes out, the update, or it might not do a damn thing, right? So it's just something to be aware of, guys, that there is going to be possibly an increase in momentum or volume or volatility for the Canadian dollar at around 8:30 a.m. Eastern Standard Time. All right. So that's pretty much what we got. We do have, again, another member of the FOMC that's going to be speaking later on in the day around 6:30 p.m. Eastern. So just be mindful of that for sure. But overall, guys, Euro CPI data is going to be big. ADP non-farm employment change for the U.S. is definitely something to be aware of. And then just the updated GDP report for the CAD are a few things. And obviously the FOMC members that are going to be speaking is what we have to pay attention to for Wednesday. Okay, so that's Wednesday. Going into Thursday, we have PMI data that's getting released for the euro. Right, we do have Swiss news as well with retail sales and CPI over there for the Swiss. I don't really pay attention to the Swiss franc. I haven't traded the Swiss franc in God knows how long. So I mean, it is there if you do trade it. Be aware that there is retail sales and CPI data getting released overall. But what I'm going to be paying attention to, guys, on Thursday is going to be this initial jobless claims, the non-farm productivity, and all this U.S. news right here up front in the early morning, right, including the ISM manufacturing PMI data that's also going to get released and all that good stuff, right? So overall, on Thursday, there's a few things, right? There's a few things like this PMI report and then mostly all this U.S. data that's getting released early in the morning. And then to close out the week overall, guys, we do have non-farm payrolls. Okay, so this non-farm payroll week. We are going to get the new unemployment rate as well. That's going to get released. And this is probably going to be the most important release of this entire week, is going to be the releases on Friday. A big reason for that is because now we're going to get jobs numbers, jobs reports, right? Again, a big reason why the Fed has still been trying to downplay this recession that we're in, right? And it's still being very optimistic is because we still technically have a strong jobs market, right? Unemployment is still extremely low at 3.5%, right? And we actually seen a very big jump in the number of employed people with the last report that just got released. So again, this is definitely going to be very important. Non-farm is pretty much is going to tell us the number of employed people from the previous month. Last month, we had a massive jump at around 528,000. So, again, there is a lot of confidence in the jobs number, but this can really change things depending on how it comes out, right? So if we see a massive drop off, which is what is expected, right? They're actually expecting the number of employed people going from 528,000 last month to now half of that at 285. If we come out even lower than that, then yeah, that's definitely going to go ahead and shake the markets. If the unemployment rate actually goes higher and we're now starting to see an increase in unemployment, then yeah, that's also going to continue to cause a lot of fear, uncertainty, and doubt in the markets, okay? So an higher unemployment rate, dollar's going to continue to fly, right? Gold is probably going to drop. Indices are probably going to drop. Cryptos are probably going to drop on a number that comes out higher, right? That's signaling that we are now seeing an increase in unemployment. Risk off. That is risk off environment, okay? Same thing with non-farm payrolls, right? Depending on how many people come out, again, that could really influence as well. But yeah, this unemployment rate is definitely going to be one of the big ones to pretty much close out the week overall. All right, but that's our calendar for the week, guys, overall, and seeing pretty much just seeing what we got going on. It's definitely going to be a little bit of a hectic week, especially to finish off the week, just because of that non-farm payroll and how much interest is going to be, eyed on that actual release as a whole. All right. Now let's go ahead and take a look at the markets and see what we got going on here. And we have some very interesting price action, guys, that we just noticed here on the dollar to pretty much finish out the week last week. Right now, very simple. The first thing that I always do, guys, and this is something that you guys need to do as well if you're not doing it, is figure out what the flow is, right? What is the flow of this market? What is the overall bias? This is step number one, guys, is to figure out the overall blueprint, right? Like, what is the macro picture of the market, right? Not just necessarily going straight to the 5-minute, 10-minute, 15-minute time frame, right? And I know that a lot of you guys do that because I used to do that. When I used to, come to the markets, guys, when I was newer, and I'll go to MT4 or I'll go to TradingView, I wouldn't go to the bigger picture. I mean, and if I did, I only go to the bigger picture just for 2 seconds, right? But normally what I did, I always go straight to the 5-minute, to straight 15-minute, to straight 1 hour time frame. And I'm trying to figure out decisions on these smaller time frames, which is a little bit hard to do, right? What you want to do is always make sure to get a general feel of what the bigger picture is saying, right? There's a reason why a lot of people get, or they lose track of what's going on, right? A lot of people have a hard time, guys, of really figuring out what the market can do. And more times of it is because they're literally just looking at it from a smaller time frame. You can literally solve a lot of confusion in market direction by simply going up to higher time frames. All right. So for example, if I were to say go to the 15-minute time frame here on the dollar index, right, and I'm just looking at it from this perspective, I'm like, oh man, what is going on? Right. It's a little bit, a little choppy, right? It looks very, very choppy, very, very sideways. We've seen a lot of very strong, bearish price actionish moves, right? So overall, those two very choppy. So yeah, it's a little harder to read and identify when to actually jump into trades on this time frame. But when we go up to higher time frames, see, now we're actually starting to really understand what's actually happening, right? So let me actually go ahead and why am I even logged out of my trading view? That's the main question I got here. All right, we're gonna go. All right, so again, going to higher time frames, guys, can really eliminate a lot of that noise that you actually see on the smaller time frames that brings a lot of confusion, to a lot of you guys overall. So go higher time frames, start off on the higher time frames, figure out the overall flow, and then go from there. So what I'm looking at now, guys, right? So we do have the overall picture here is that we are clearly bullish. So my blueprint for this week overall, now reading price action, let me go ahead and just highlight a few key levels, right, that I'm going to be very interested in overall. So we have this level of structure, which I know most people are probably thinking like, Abel, why'd you randomly pick that level, right? Well, it's not random. These levels are all, done as specific, for specific reasons. The thing I don't do, guys, I don't focus on trying to make perfect levels. Like so many people are going to ask me, Abel, do you use wick to body for the zones? Do you do body to body, wick to wick? Like, what do you do? I just highlight it, right? I just highlight the zone. I don't care about making it perfect, trying to get the wicks in the bodies. I don't care about none of that. The reason why I use these zones is simply just to read price action from them, right? It's not about reacting off of just one simple rejection from them. I don't care about one real little rejection off of these bigger levels. No, I want to read overall price action from these levels, right? So I don't care about perfect zones. I care about just identifying the fact that this is a level that clearly price continues to react from. It's that simple. Okay, so we have the high of this market. Then we have this piece right here, this level right here that has clearly been acting as a major level of structure support or just a major area of price demand. Because every time price has come down to this level for the dollar, what have we seen? An increase in demand. Now, what's more interesting, guys, and this is the big reason why I'm now going to be approaching the markets from this way, right? What's interesting is literally how we ended up closing last week. Right. So again, we have this level of structure, this level of support. We clearly see it. But last week, we had a massive little spike down, right? A massive sell-off into the 50-period moving average, into clearly a lot of liquidity that was built up down here. And the spike is important, but the follow-through is just as important when it comes to reading price action and momentum. All right. So yeah, we had a very aggressive spike below this level of structure support. We had a very interesting rejection, shows that the demand for the dollar is very strong at these levels. And then we had to follow through with this very strong bullish engulfing candle. So what should be my objective going into this week long term? It should be aligning myself with that type of bullish momentum, right? If we have evidence that we clearly have a lot of demand from this level, we're already in the overall bullish trend. Keep that in mind, right? That's very big. But the fact that we do have demand starting to pick up after a short-term pullback of about maybe a week or two, right? We see a very aggressive, but yeah, there is a good chance. The probability now is that this thing is probably going to continue going higher. That is the overall highest, in my opinion, that will be the highest probability opportunity here in the market, is to expect dollar bullishness to continue going into this week. So that's going to be my blueprint. All right. I do want to see dollar bullishness go into this week and continue into this week. Now, if for whatever reason, right, because again, it's all about demand, right? Is there demand or is there not demand, right? If there's demand, then dollar is going to continue higher. If there's no demand, then dollar is going to decrease. So for whatever reason, we actually see the market rebound, or at least not rebound, but if we see this thing come back down and it breaks below the 50 and we close, then that means that there is no demand for the dollar. And we're just probably at that point going to experience lower pricing, right? So a weaker dollar is also going to tell us how to react when we're trading currency. So that's just something else to keep in mind. If we end up breaking back below this for whatever reason, the market's going to do what it wants, or I don't expect it to happen. But if it did, we have to be ready to react, right? Because a big reason why, guys, a lot of people fear, right, have fear in these markets, a huge reason why there's a lot of fear in the markets overall, is because people are trading based off the unexpected, right? When I figure out any possible situation or a possible scenario, right, when I look at my opportunities, I say, all right, this looks like a very good setup right here. I like this, and this. I'm going to take it once it gets there, right? But what I also do as well is I always put into my mind, all right, but I'm confident about this. It lines up with my strategy, but what if we end up losing? Then what, right? Then how do we approach the markets? Because again, a lot of people, they take a loss and they don't know what to do next, right? And then the first thing that comes up to their mind is to try not to make that money back. And now they start going now they start going down the road of revenge trading, right? And that's obviously going to lead to a blown account. But when you actually figure out scenarios before you even enter the trade, you can accept the outcome because you knew that it was a possibility. And when you have the understanding of the fact that it is a possibility for the trade to reverse and hit your stop loss and go in the opposite direction, you're usually not going to be as emotionally involved, right? You'll be able to manage your emotions a lot better. And even better than that, you can also accept the loss and now trade in the new direction of the trade, right? So for me, for example, if I'm looking for the buy here for the dollar, cool. But if the market ends up breaking and we end up losing, guess what? That is telling me that we clearly have no demand. So now I'm going to start looking to sell it instead. So I'll take my little 2% loss here on the buy, but then I'll probably get it back on this 4, 5, 6% gain on the sell instead. All because now I was aware of the possibility of the market doing something else. And I was also able to create a logical based decision on now taking advantage of that. Right. So that, I hope that makes sense, guys. That's literally, in my opinion, the best way to approach it. Right. Yeah, you got to have confidence in riding one direction. But what if, right? What if the market is going to do what it has to do? Right. The market is going to reverse on the most bullish setups. Right. The market can go bearish on the most bullish opportunities, the most bullish setups. And the market can go bullish on the most bearish opportunities and the most bearish looking setups. Right. We don't have that type of control. We don't have that power to have that control. So we don't focus on that, right? We don't focus on what we can't control. We can't control what the market eventually ends up doing, but we can control on how we're going to prepare ourselves, right? If the market was to do this type of basis. If the market does this, cool. We'll react and we'll adjust this way, right? If the market does that, cool. It is what it is. We'll react, we'll adjust, and we'll take advantage of the next logical opportunity, right? And I say all this because I get this question a lot, right? Where people ask me, Abel, if I take a loss, but the trade still looks good, am I able to actually jump in? And the only reason why you're able to jump back in after a loss into a same setup is if it makes sense logically, right? If it logically makes sense, then yeah, go ahead and do your thing, jump into that trade and take advantage of it. Okay, so the whole point of this entire practice here is to, again, be able to control your emotions so that you can make logical decisions even after a loss, not an emotional one, a logical one, right? So yeah, I think that we are still very much bullish here, guys, for the dollar. I would love to just see this thing probably, push back down into this previous structure right here, into this last little sell-off where the selling pressure really picked up. And then from there, I would love to see more high-end pricer for the dollar itself. So let's go ahead and take a look at now a few different pairs and see what we got going on here, guys. So I'm gonna start off with Euro US Dizzle, right? Just because, again, it's probably the easiest. If you do an in-depth analysis, guys, of the dollar, then the easiest pair for you to be able to trade is definitely the euro, right? Euro USD is by far the easiest, right, asset to trade or currency pair to trade if you're doing your understanding or your deep research on the dollar as a whole. Right now, why is that? Well, let's go ahead and let's go to Google. All right, and in Google, let's talk about what is the DXY. All right, so the dollar index, what is it? Is a measure of the value of the US dollar relative to a basket of foreign currencies. Okay, now let's see actually what currencies make up the dollar. All right, so what currencies make up the DXY? All right, so let's see what we got. Let's see if we can find this, right? Okay, so we have the euro. All right, so it's made up of the euro, the Japanese yen, the Canadian dollar, the Great Britain pound, the Swedish krona, and the Swiss franc, right? That is what is inside of the dollar index. So it is the US dollar measured against these currencies, okay? Now, the euro, and the reason why it is the easiest one to trade out of everyone, it's the big boy of the bunch, right? It makes up 60%, right, of the dollar index is mainly the euro, right? And that's also because the euro is also one of the most traded currencies across the board as well, right? So yeah, the euro does the exact opposite. Euro USD would do the exact opposite of the dollar index for that reason, because it's made up mostly of that. So overall, what should we expect Euro USD to do long term? If we're expecting bearishness or bullishness to come back in for the dollar, then that means we should expect or assume bearishness to come in for the euro. Because if the dollar strength does come in, then this has to drop. It just has to. Right? So yeah, I want to see bearishness continue. So overall, looking here at the euro, we can see, right, that price, again, very similar price action. Massive sell-off. We've seen price pull back, but then we've seen some aggressive rejections here, right? Super strong bullish candle that at one point was all the way up to this level, got completely erased, and not just erased, but there was so much selling pressure here that it even closed as an engulfing 4-hour candle. That's a lot of selling pressure that came in. I like that. I want to ride with that, right? I want to go with the path of least resistance, right? And right now it seems like the path of least resistance, from a technical perspective, from a fundamental perspective, from a momentum perspective, which is like current, it all is targeting or leaning towards the downside. So what does that mean? It's probably best for us to look for some shorts going into this week for the euro. All right, so now where can we look for some shorts from? Well, again, we do see a very strong reaction to the downside. I would love to see the market rebound back up to here and then eventually give us an opportunity to go short. All right, so for me, going into this week, a retest back up to specifically, if we can see price come up into here, all right, up into this level, I would like to see it come up into this level up here, right around the 1.002 level, right? And what you can do is obviously go to lower time frame as well and really start to fine tune your entry by looking at what candlesticks are doing, see if there's any imbalances, any gaps that need to be filled, and things like that. Right, but I do like the fact that there is a chance for price to make its way up here, right? And if we can get up there, then oh yeah, baby, I like the possibility of us selling this back down, right? So something like this, guys, is probably a really, really good opportunity here for you, Euro USD. Target back to the lows, but ultimately, I think we can continue to make new lows, once we do get back into this little bearishness. But this all day long, I like this sell, right? I like the sell from around 1.002. So if price can get up to that 1.002 level, I like it, risking around maybe 20, 30 pips to then go ahead and target all the way back down to the lows for around 120 pips or so. So that is just a setup, guys, that in my opinion looks absolutely attractive going into this week. So we definitely go ahead and keep our eyes on that one. Now, another setup that I'm going to be very interested in, guys, is going to be gold. Gold actually did see a nice little sell-off to pretty much close the week overall last week. As you can see, I've definitely been looking for the shorting opportunity for gold here, and I still am looking for the shorting opportunity for gold here. We actually seen a very interesting reaction off level of structure there, and I think there is a chance for us to continue now. All right, so I think we do have more sell side pressure, guys, probably coming in for gold. Now, where can we expect gold to come up to, though? All right, where is a good area for us to really look to short? Well, we're here on the daily time frame. Right, we have this very aggressive daily candle here, right? That shows a very strong bullish, or not bullish, but bearish engulfing. That's a lot of selling pressure. This candle that got engulfed, right? When price gets back up to there, that is probably where we could start to expect demand to weaken again for the gold. So then it could send us much lower. So I like a sell on gold, probably around the 1751 levels, 1752. Right now, that's from a bigger time frame. So let's go lower time frame, really see where we're here now. All right. So yeah, I really like this area for sure around here. Right. So yeah, if pricing come back up to this level right here, guys, of structure, right, 1752, 1753, actually, then that, in my opinion, that looks like a very attractive area for us to go ahead and go short on gold. Right, super attractive play here. All right, and I think again we could really target all the way back down, not just to those lows, but even all the way back down to these lows. And this is a big boy move. This is a big risk to reward. 19-1. That is insane risk to reward. Right, that is risking 2% to go for 30 something, 38%. Right, so again, if we can get an opportunity to get in here on gold, I like it. I like the chances of this thing to go ahead and send us lower. Even since the risk to reward is so amazing, you can even give yourself a little bit of a wider stop loss just in case, right? Because again, gold is extremely volatile, so the stop losses are going to be a little wired by naturally. But yeah, either way, even if you had a 50 pip stop loss, right, targeting all the way to these lows is still a phenomenal risk to reward, which can get you a nice return for sure. All right. But this one, guys, looks very juicy. I'm going to keep my eyes on gold as well going into this week. Now, I only have about 2 more pairs that I'm very interested in. So let's go ahead and go over those. So one is going to be GJ. I'm still very bullish GJ. This thing has literally just been a pain the past literally few weeks, right? Not just a few days, but the past few weeks, right? Maybe even an entire month. It has just been annoying, right? Especially down at this level right here that we've been pretty much just playing off of for the past 2 weeks. But overall, guys, I'm still, even though we are, it's been very annoying, that's why it's so important to be patient as a trader. I still want to see higher pricing, all right? I still want to see price higher, okay? So I really want to see, hopefully this week, even though we're not hope traders, right? It's just a matter of, again, it makes sense logically for price to go bullish. Can we actually get some strength and some follow through, right? Because the moment we can break above this 163.2 level, then we're gone, right? We are gone. We're flying to the moon at that point, right? So that's really what I'm going to be looking for, guys, right? I'm still very much bullish, GJ. We did just see a very aggressive sell-off, but I'm still very much bullish, right? So if we can see price break back above this 161.6 level, then I think we will have a lot more upside to go, right? So a break of the 161.6, I'm going to be starting to look for some long opportunities to definitely go ahead and target all the way back up to these highs, right? We're talking about, this is a big boy move as well, guys, like a big boy move, right? So that's what I like, a break and close above 161.6. I'm looking for longs all day long for GJ. So I'm definitely bullish, just being patient, being very patient, seeing what the market ends up giving me, but I'm definitely going to be preparing myself for the opportunity to go ahead and go long here for GJ. All right, now let's go take a look at an indice, right? Let's take a look at NAS right now. NAS and all of these indices just absolutely tanked to finish out the week last week. We're talking about this daily candle, guys, is definitely probably one of the biggest bearish daily candles we've seen since June. Right now, obviously, off of this type of momentum, I'm expecting more follow through, right? I'm expecting more downside for sure. So we could see a short-term pullback. But overall, guys, like I think we're very much so going to continue selling off here for these indices overall, right? So going into this week, I'm going to be looking to see if price can make its way back up to maybe around these levels, right? Around the 12,800, 12,809, something around here, right? 12,800, 12,900. You know, up in these areas, guys, is going to be a real attractive place to go ahead and look for some shorts here on these indices overall, right? So again, bigger time frame analysis though, bigger picture outlook, but yeah, you know, I really do like this potential here, right? Around this 12,800 and yeah, 12,800. So, all right, so that's all I'll be looking for. You know, a nice shorting opportunity if we're able to see, you know, NAS make its way back up there. And again, another phenomenal opportunity with a phenomenal risk reward as well, if we are going to continue in the direction that I think we actually are in. All right, this is just super bearish, and I want to continue with that. Yeah, so that's another one, guys. NAS also looking very juicy. So I'm gonna keep my eyes on a few of these setups. My favorites are gonna be the ones that I talked about: Euro USD, gold, GBPJPY, NAS. So those are gonna be the ones that I'm really gonna be keeping my eyes on, guys. But overall, you know, it's gonna be a phenomenal week. I'm excited for this week. It's gonna be a banger of a week, in my opinion. The markets are setting up nicely for some long-term plays. That's the thing, guys, right? The big difference with this week is that we have opportunities to find some long-term plays here that we can really ride out, right? So if you are normally a scalper or a day trader, well, now could be an opportunity on some of these entries, right? Some of these entries can really get us some swing trading opportunities where we can hold it not just for a few days, but even for maybe a week or two, you know, to be able to make 4, 5, 6, 700 pips at a time, right? So definitely interested for that as well, guys, to see pretty much how the markets end up playing out. But I do appreciate you guys for watching, for rocking with me. And yeah, I hope you guys gain some value.